We are here at the Goldman Sachs 2024 Communicopia and Technology Conference. I am here on set with our executive editor, Brian Sozzi, and we are thrilled to be joined by Toshiya Hari. Toshiya is, of course, the lead analyst covering semiconductors at Goldman. Thank you so much for making time with us. We got to start on the Nvidia of it all. You've got to buy on Nvidia despite the record sell-off we've seen in the stock over the last week. Make the case. Why are we still a buy?
Yeah, thank you for having me. First of all, it's great to be here. So we've had a buy rating on Nvidia for quite a long time, and to your point, the recent performance hasn't been great, but we do remain positive on the stock. A couple of things. I would say, first of all, demand for accelerated computing continues to be really strong. We tend to spend quite a bit of time on the hyperscalers, the Amazons, the Googles, the Microsofts of the world, but you are seeing a broadening in the demand profile into enterprise, even into sovereign states. Number two, I think their competitive position continues to be really strong. I think at this conference you'll hear from Nvidia, Jensen Huang, we have Lisa Su, we have a couple of the hyperscalers at the show as well. So there is a bit of a merchant versus custom silicon debate going on, but we do think within merchant silicon, Nvidia is the go-to. And even versus custom silicon, they've got the edge in terms of the pace of innovation. And last but not least, from a valuation perspective, perhaps for the wrong reasons, but the stock has come in quite a bit. On our numbers on next year's earnings, the stock is trading in the low 20s, which I think is very inexpensive for a stock with this kind of profile.
Do you think the sell-off is just overdone?
Yes, we do. I think clearly the stock had great momentum until sort of the June, July timeframe, and stocks never go up in a straight line. So we kind of appreciate why the stock has given back some. I think the debate around is this sustainable into 2026 is a fair debate.
So people are looking beyond 2025. They're valuing Nvidia on 2026 already?
Valuing on 25, but depending on how the outlook is into 26, what kind of multiple you apply to 25 numbers is kind of the key debate. And interestingly, we were having a very similar debate 12 months ago in 2023 when the stock was sort of range bound the back half of 23, and that was due to, again, multiples going from, call it 50 times down to 30, 25. And back then it was, okay, 24 is kind of in the bag, but what about 25? So we're having a very similar conversation as of today into 26.
When you look back on this earnings cycle so far too, there was this big question about ROI on AI, investors getting a little bit of fatigue perhaps on the amount of money being spent on AI. How much of a headwind could that be for Nvidia if companies are getting dinged for their spend on the expensive Nvidia chips?
Yes, I think it is something to look out for. Again, lack of customer ROI, whether it be the hyperscalers, whether it be the enterprises that are trying to leverage AI, that becomes a problem at some point, right? We need monetization for this to be sustainable. I think the hyperscalers do make a pretty good case in terms of their ROI. I think if you look at ad revenue, you look at things like Instagram, the platforms, they are leveraging AI and they are getting the return. So we're confident as a collective unit that this is sustainable, but to the extent there's a lack of monetization, that could be an issue for not just Nvidia, but for the overall ecosystem.
You mentioned the hyperscalers, that's the Amazons, Metas, Microsofts of the world. They're building their own chips now, and they're certainly cheaper than Nvidia's. Can they ever compete directly with Nvidia and take up more market share than they are currently?
So they do. They have been competing with Nvidia in some shape or form. I would say most of the custom silicon is there to address internal workloads. In the case of Google, it would be Google Search. But GCP, which is external looking, they're still buying a boatload of Nvidia GPUs. And you can make the same case for Amazon. So I think you'll see a bifurcated market where, again, the internal workloads are addressed by their custom internally designed silicon. But what's outward looking, they'll continue to buy NVIDIA GPUs, AMD GPUs, and so on and so forth.
Important to note, you're not just the NVIDIA analyst for Goldman Sachs. On the other end of the spectrum, you cover Intel. Yes. And on the other end of the spectrum, you have a sell rating on Intel. Now, the stock is near historic lows. They're announcing thousands of layoffs. Earnings are depressed. What does Intel need to do? I won't say save itself because that's just ridiculous, but how do they get their stock working? And when do their earnings start to improve? And when does the investment thesis start to improve?
It's a great question. To your point, to your question, we've been pretty cautious on the stock for some time. I think for starters, it would help for the company to start hitting what they guide to, right? They've disappointed the market quite frequently, and that's never good for a stock price. So that's number one. Number two, medium to long term, they definitely need to get on par, if not exceed or surpass TSMC from a process node technology standpoint, because without that, they are behind the curve from a foundry standpoint. If they don't have the best tech or good tech, customers are not coming to Intel. They're going to continue to work with TSMC. And then on the product side, you can't really compete effectively with the likes of AMD, Nvidia, Qualcomm, so on and so forth.
Do you think they will ever be Intel again, where they are in that same discussion within Nvidia, AMD, or their time has passed?
Never say never, but I think it's fair to say that it's going to be an uphill battle because, again, in hindsight, they were perhaps complacent, didn't make the right investments. They sort of allowed TSMC to catch up and to beat them. If you're a customer of TSMC and you've got this massive opportunity set in front of you that is AI, for you to essentially leave TSMC and go to Intel or any other foundry for that matter, that's a lot of risk. So I think for Intel for sure, but even companies or foundries outside of Intel to compete with TSMC in the broad growing ecosystem, again, it's going to be an uphill battle.
Toshiya Hari, thank you so much for joining us and making time. We really appreciate it. And thank you to our audience for listening. Stick with us for more of your markets coverage right here on Yahoo Finance.